Hi everyone, hope you're doing well. Today I have a bit of a week ahead preview for you guys to get ready for the next or the upcoming week in the stock market. We're going to take a look at some earnings on the UK. Big one coming up for me, and I'm sure some of you guys also own shares in this one that's going to be reporting earnings this week with a Q2 update. We'll talk about some stocks that are reporting earnings on the US, and then we'll talk about what's next for the stock market going forward on the UK and the US market, and some just general news with what happened over the weekend. So I hope this video is useful for you to get ready for the week ahead. Just another quick shout out, I did also on the Patreon drop a review of Aviva New and Gambling.com's earnings last night. So if you're on the Patreon, go check that exclusive video out. If you do want to join and see the exclusive video, links in the description, guys. And as well, I apologise, I think I upset a few people yesterday. I posted about a brand new UK stock I've been buying, which was actually met with a lot of negativity, which is great because when everyone's normally negative on the stock, that's normally a really good opportunity. So yeah, that gave me a lot more confidence that when everyone doesn't want to own it, normally the best times to be buying. But also, I think I upset a few people that do patios. I said that people that do patios are charging way too much, and I put it in Gemini, and it said here that at the moment £280 to £400 per day. Well, I'll tell you, like I said, the quotes I were getting were £600 a day on labour. Absolutely incredible. In my opinion, way too much money. Especially when you look at what at the moment firefighters get paid. What, 127 quid a day? Teachers get paid 160, 200 pound per day. I've finished the patio. I'll show you. I've just got to point it and grout it, and I'll put a poster, a picture on maybe tomorrow's video when that's all done. And it looks pretty bang up job, and that's the first one I've done. And I got to say, if it's my first attempt and I can do an okay decent patio, and people charge £600 for a day, and people that have them sort of jobs are getting a third of it. Not that I'm against people that do patios. I'm not against people. If people thought I was having a go, I said just that it's crazy money that's being charged for doing something like that. In my opinion, hey, it is what it is. So yeah, apart from that, we'll get stuck on today's video. Before we do, a quick shout out from today's sponsor. Kraken currently offers 350 different types of cryptocurrencies, including Bitcoin. It has a very easy to use interface, and you can also use Kraken on your mobile phone and the web browser. Kraken currently has 15 million clients and is available in 190 countries. Their app is currently rated 4.7 stars on the App Store, and also Kraken received the award for Finder's Best Crypto Platform award last year. It's also rated 4 stars by Forbes, and Kraken currently gives its users 24 hours, 7 days a week support on its platform. If you do want some extra features, you can go get Kraken Pro, which gives you advanced features like detailed charting, and as well on Kraken you're able to buy cryptocurrencies from $10. If you do want to join, there'll be a pinned comment in the comment section, and also there'll be a link in the description of this video. All the content has been prepared by Kraken, and thank you so much for Kraken for sponsoring today's video. And with all that done, let's take a look at some of the things that are coming up this week. So first of all, UK markets. Obviously, we're shut today on the UK. Still making a video for you guys on the bank holiday. On the Tuesday, though, tomorrow, nothing too major. I mean, Ashtead are reporting. I know a few people like that one. Bunzl, I think they had a big drop last time, and I think a few people got into that one. So just keep an eye out for that one if you are in them ones. But the big one on this list for me is that one at the top. JD are going to bring the earnings out on Wednesday. So looking at JD Sports, they've been on a bit of a rally since those April lows and those June lows, kind of in partnership where Nike has been coming out as well. So it seems like there's a bit of momentum building in the sector at the moment. We know these aren't going to be great earnings. We don't have to look at Nike to realise this sector is still not great at the moment. But when we look at what they reported in Q1, in the Q1 26 trading update that they put in the full year results here, you can see here organic sales was 4.7%. So obviously we don't want to see that going any lower. Probably the big one is like sales. That was quite negative in Q1. I think that's what ultimately meant the stock actually dropped a significant amount. So we want to see improvement on like-for-like sales. The worst thing is if that's getting worse. We definitely don't want to see that number. So that's going to be key as well. So yeah, keep an eye on sales. Keep look on like-for-like. And the other thing you want to be looking out for is gross margins. So the moment saying gross margins was in line with the prior period. So we want to see that gross margins are either in line or improving. We don't say them that they're actually slightly worse. So keep an eye on those numbers. But overall, I'm looking at the numbers that analysts are expecting them to do this year. Slight increase in the revenue, as you can see here. Companies currently trading at 7 times earnings. I don't think that's even been updated on Google at the moment, but yeah, 7 times earnings for JD Sports. Wow. This company should easily be like 13, 14 times earnings. And if they do hit the full year, I mean, we're halfway through, aren't we now? If they hit the full year guide, we're going to be starting to push even lower than that, which is just absolutely incredible to see, isn't it? So, yeah, let's see what JD end up reporting this week. On the US side of it, we've had PDD already. I think the stock, I've not actually seen the numbers, but I know the stock's up slightly after reporting their earnings. And one that I do own is EHang. They do own on Tuesday morning. That's a bit of a spec play that I've got into the drone space. Picked it up about 3 years ago, and since then the stock hasn't really done anything. Like, I think I'm literally down like 20% on the position, which, yeah, it's not great. But the thing is, actually financially they've done really well. They've got the certification. They're actually starting to scale up now because they're able to sell them. They have a working passenger drone here, and that's clear when you look at the financials. But the really frustrating thing is the company's currently valued is still at 1 billion market cap, which is when you look at someone like a Jobby that are also in this space, and they currently have a product that doesn't work. They don't currently sell anything, and this is currently a 12 billion market cap. And even when you look at someone like Archer Aviation as well, same again. They've basically got no products. They don't sell anything, and this is a 6 billion market cap. So it's been really frustrating with EHang because it's a spec play that I bought, and I would actually say that it's kind of worked out because they've got the certification, they've got a product that works now. They're starting to sell the products, and yet this is valued so much less than companies that don't have anything. You got someone like a Jobby that's valued at like 12 times what EHang is. You got someone like an Archer that's valued at like 6 times what EHang is. It's a bit frustrating, to be honest with you, because the worst thing you have is when you buy an investment, you hope it works out, and it does start working out, and then you get no reflection on the share price. That's honestly the worst thing. So we'll see what happens here anyway with EHang when they do report. And then we've got a box PVH, that's always an interesting one as well. On the Wednesday, probably the big one that we're looking at, a bit more retail coming in, as you can see here from Coles, for example. But Nvidia, that's going to be a key one. And see, their numbers still look actually really good, to be fair. And when you look at the valuation, I don't know if I can go on Stockopedia really quickly and just have a quick look at Nvidia's numbers with you guys. But the growth they're expected to do is still like 40-50%. And I mean, 40 times earnings, dropping down to 29 times forward earnings. It's not terrible, is it? But what will happen is probably more than likely AMD will move off whatever Nvidia reports. So it'll be nice for Nvidia to do good numbers. So everybody looks at AMD and goes, oh, so AMD are going to do good numbers as well, and AMD will move probably something off what Nvidia do. If Nvidia goes down, AMD will go down. So yeah, hopefully they do good numbers, and then my AMD position is moving up nicely on that day tomorrow, or on Wednesday, should I say. Snowflake are reporting. A lot of people are starting to talk about Snowflake a lot more again now. CrowdStrike, HP are reporting. And then we move across to the Thursday, get a bit more of the retail once again coming in from the US, so like Dollar General, Best Buy, for example. Dick's Sporting Goods, so good crossover for JD Sports there as well. Ulta Beauty, I didn't actually realise, I saw my Ulta position a while ago, made some okay money on it, nothing too crazy, I think it was like 15%. But honestly, I didn't realise how much that's kind of rallied up since I sold the position. And the thing is as well is like, it's not even cheap either. Like, the fact that the numbers haven't so far been absolutely amazing. So if we look here, revenue growth is basically, it's still flat. And net profit is still, moving downwards. And yet it's still trading like 22, and even on next year's numbers with a bit more growth coming back. And profits starting to move a little bit back up in the right direction. Like, Ulta is like 20 times earnings. It's incredible, isn't it? Like, you've seen B&M do, and JD Sports potentially do better. I mean, they haven't been doing great numbers, but they're probably even better than these. And yet you've got someone like a B&M at 6 times forward earnings. Like, it's incredible, isn't it? Like, the metrics that these US companies and even retail companies trade at compared to like the UK companies is like double, triple the valuation, isn't it? So yeah, I couldn't believe how much Ulta has run up to, and the valuation it's now trading at. It's incredible, isn't it? A firmer reporting. Alibaba. I actually thought Alibaba were reporting last week. I thought they confirmed it, but they haven't. So they're actually going to report on the Friday. So we'll see what numbers Alibaba come out with. Some interesting news that happened over the weekend. So the first one, the White House announces chipmaker Intel to give US government 10% stake. I could not believe this. The US government investing into US companies and owning them, like, that is, I couldn't believe it when I saw this. Like, this is absolutely mental, isn't it? Like, what they're gonna do? Like, surely this, it just doesn't work, does it? Like, the government's gonna give a contract out, or all of a sudden it gives a contract out to Intel. Well, that's not suspicious when you got a 10% stake in Intel. Like, what happens if Intel does something wrong? Oh, what, the government's gonna give them a fine to themselves? Like, how's that gonna work? Yeah, yeah, so it shouldn't be. In my opinion, I can see some sides of like why they are doing it, and like US owned chips and everything like that. But yeah, it shouldn't be happening in my opinion anyway. SoFi, the run continues on SoFi. Really good performance today, up around about 5%. Year to date, up 85%. Thought I'd shout SoFi out because it's been an absolute mega performer so far this year for us. I think it's like a fifth largest position in the portfolio. So real happy for the SoFi and the run that's currently been on. Just another example of a stock that sometimes, you have to sit on the stock for what, 2 years, as you can see here, with the stock going sideways, and as long as they financially execute, eventually you will get rewarded, and that's the case with SoFi. And also, I started off the video talking about a brand new UK soccer being buying. Very big different companies and different sizes here, but the same still applies. Like, I remember SoFi when it was $5, $6, $7, and especially like when it started pulling back again, and people were fed up on about it. People were negative on it. Nobody wanted to own SoFi. I remember making videos on SoFi when it's $6, and the comment section just so negative on them. I was like, well, as I said to you guys at the start of the video, it gives me confidence, because when everyone's negative on the stock, I always think, oh, there could be something here. Then, as soon as the momentum shifts and everybody starts piling back in, as we've seen here, and people that weren't willing to pay $9 for it a couple of months ago are now willing to pay $26 for it. So yeah, great day from SoFi here. Now, what is the future for the US markets at the moment? Well, interestingly, on Friday, it sounds like the Fed, Jerome Powell, came out, and Jackson Hole said, look, we're potentially going to start doing interest rate cuts now. Don't know where that's come from. Don't know if that's just the pressure building up with a lot of people saying it. And obviously, you probably saw the split decision last time, which never happened. You never really get that split decision, even though people might disagree. They normally all vote in the same direction, and that didn't happen. So maybe the cracks of people like finally piling on the pressure has kind of got there. But where does it leave the US stock market now? We'll cover the UK in a second, but with the US stock market, I've got to say, like, this could potentially be the next catalyst of like how stocks run up. Obviously, in that meantime, you can still have any new stories that come out. Potentially, I don't know, invasion in a country or something like that, and that's what the market will then focus on if that does happen. But this is probably going to be the focus on the next kind of couple of weeks, is how we're going to start getting interest rate cuts, and the market might start getting excited. What might actually happen is that when we do get the interest rate cuts, then you might actually see the market start like pulling back a bit, because it's like, okay, well, the thing that we've been building on for the last 2 months is that when we're going to get interest rate cuts, they're going to happen, and then you get them, and then all the market goes, well, what we're going to get excited about now? What's the next kind of thing to lift the market higher? So that could be where the market ends up being in September time. But I've got to still look at the S&P's valuation at the moment, and I've got to say, like, I do look at the S&P's valuation, and it's now at 29 times earnings. And I've been on about this for a while. Like, the market normally trades at 20 times earnings. I know people say it's different this time, which is normally when people start saying it's different this time, you do start getting a little bit worried. But I mean, it's like 40% above where it normally trades at. And I know that people say, well, this time, there's more regulation around the market. There's the kind of, if anything was to happen, there's all this kind of stock triggers in the market. And people know to buy the dip. That's all relatively true. And these SaaS companies, higher profit margins than ever. But I mean, okay, you added 10% premium on it, maybe even 20% premium. But the fact we're at 5% premium, So I do look at the US market, and there might still be a bit more momentum in there, and that maybe lead us into Q3 period. But I do look at a lot of the valuations at the US markets, and there's still some gems out there. I think it's a real big stock pickers market, and that's the case for me. Is that for me, I'm not buying the S&P 500. I'm trying to find undervalued stocks, and there's still a couple I can find out there, and there's not as many. There's definitely not as many, but I'll continue to buy the stocks that I do believe are undervalued, and I'll stay invested into the market even when I do believe it's overvalued, and I'll continue to buy because I thought the same thing at the start of the year, and this year so far the S&P's gone up another 10%, so that's why I always stay invested. But certainly a point of where the cash piles get built up a little bit, the buying slows down maybe just a little bit, maybe a little bit more caution, maybe a little bit slower on the buying. I certainly think that's definitely not the worst tactic at the moment. So that's where we're at on the US side. On the UK side, definitely not as pretty. There's definitely a lot of things going wrong at the moment in the UK side. One of the things that I am keeping track of at the moment is the UK inflation. Just keeps going up in the wrong direction. As you can see on true inflation now, we keep going higher and higher. We have now got to 4.2%, which is incredibly high, which is definitely a major issue that's currently going on in the UK. I think in overall, I think the UK markets could be a little bit subdued now for September and October. I think we've got 2 months where the market's a little bit unsure, maybe a little bit nervous even. I think that a lot of people are going to be looking at the autumn budget, and people are going to be looking at the tax rises that's going to happen, and I think a few people will be worrying, okay, how bad it's going to be. How are some of these companies going to get hit by some of these tax rises? Is it going to hurt them even more? We've seen how much a lot of companies have struggled to eat up the last tax hikes. If there's even more, they're going to struggle even more. So there's definitely going to be a lot of nerves around that situation, in my opinion. We've already seen the typical thing where when there's these changes that are going to be made, they always seem to get leaked to the media, like, oh, the government are thinking about doing this tax change, and see how much outcries, oh, you can't be doing that, and they go, oh, okay, we won't do that one, it wasn't well liked. How about this one? We'll leak this one to the media. Oh, that one didn't get as bad reception, maybe we'll follow through that one. There's going to be all them kind of cases, and we've already seen it, that's starting to happen at the moment, and I think maybe for the next 2 months, companies might get a little bit nervous around that situation, and they actually think then after the budget, after that, then hopefully there might be a thing where, actually it weren't as bad as what we were thinking it could be, and then maybe we have that little bounce up on out of after the budget of like, okay, now we know what's happening. There's the market doesn't like uncertainty, and then if you do get the certainty, okay, these are the changes that are going to happen, or these are the changes that are going to happen, and we actually didn't think it was as bad as what we thought it was going to be. That's when the market might actually go, okay, now we know what's going on. Okay, here we go. We'll see what happens, because I think that's what the market on the UK side might end up doing, but we'll see what happens there. But same again, a long-term investor, it don't all this kind of really doesn't bother me. At the end of the day, I'm an individual stock picker. I'm buying stocks that are undervalued in the stock market and still performing decent. And I think that whatever happens, they'll be able to work their way through it. And obviously the valuation will be on my side as well for any of these kind of negative sentiments that are built up in the market anyway. So yeah, that's the week ahead in the stock market with some earnings, and then also just some talk about where the US markets are at, where the UK markets are at, some SoFi appreciation, and also the Fed potentially pivoting after maybe the pressure's got a bit too much. So yeah, I hope you enjoyed the video, guys. Thanks for watching, and I'll probably see you tomorrow.